Hello everyone and welcome to Zee Entertainment earnings call to discuss company's performance in Q4 FY18. Joining us today on this call is Mr. Puneet Goenka, Managing Director and CEO of Zee Entertainment, along with senior management of the company. We'll start with a brief statement from Mr. Goenka on the fourth quarter performance. Subsequently, we'll open the call for the questions. Before I pass it on to Mr. Goenka, I would like to remind everyone that anything we say during this call that refers to our outlook for the future is a forward-looking statement and must be taken in context of the risk that we face. Thank you, and over to you, Mr. Goenka.
Thank you, Bijal. I would like to welcome everybody to this call and appreciate your joining us for the discussion on the results of the fourth quarter of fiscal 2018. As most of you would be aware, we launched our new digital platform ZEE5 in the month of February. We are happy with the initial response and we are confident that the sheer depth and breadth of our content offering makes it stand out amongst the host of platforms present. With digital, exclusive original content, an expansive movie library, catch-up TV, international shows dubbed in multiple Indian languages, music videos, kids entertainment, lifestyle-related content, and extensive live TV offering across languages, ZEE5 is a one-stop entertainment destination for Indian consumers. We have also focused on the peculiarities of Indian market and designed technological features to improve the user experience. Unlike most of the existing apps which are either focused on English-speaking segments or the youth audiences, ZEE5's exhaustive content catalog is designed with an objective to cater to all sections of the video viewing audiences. We are delighted with the strong operating and financial performance during the quarter. Domestic ad revenue growth of 24% is driven by broad-based recovery in advertising spends. With high visibility of product campaigns, improving consumer demand, and GST-related benefits trickling down to ad spends, we are confident of continued traction in advertising spending. The full-year domestic subscription revenue growth of 12% is a tad lower than our initial expectations due to some unforeseen events. However, there is no change in our medium-term outlook for the same. EBITDA for the quarter was rupees 5.06 billion, with an EBITDA margin of 29.3%. Full-year EBITDA was 20.8 billion, with an EBITDA margin of 31.1%. The cash and treasury investments for the quarter ended 31st March stood at rupees 32.4 billion. Now coming to the operational performance. In fiscal 2018, Zee was the number one network in the non-sports and non-news entertainment segment with an all-India viewership share of 18%. The network improved its performance in several regional language markets and became the leader in pay Hindi GEC segment. Zee TV maintained its leadership position in the pay Hindi GEC segment. The newly launched shows have performed well and further strengthened our position in the fiction genre. And TV largely maintained its market share in the urban market. In the Hindi FTA segment, Zee Anmol was a leader and Zee Magic continued to perform strongly. Our cinema cluster continues to retain its leadership position in the pay Hindi movie genre. Our regional entertainment portfolio witnessed another quarter of strong performance. Zee Marathi continued to be the leader in all prime-time slots and maintained its number one position. In West Bengal, Zee Bangla gained significant traction and narrowed the gap with the leader. Zee Telugu maintains its share and is a close second in the urban market. Zee Kannada improves its share to second-ranked channel in Karnataka. Zee Tamil further improved its market share, raking up its highest ever time spent number. Zee Sarthak continues to be the leader in the Oriya market, and Zee Ganga maintains its strong viewership in Bhojpuri market. Zee Studios, our movie production division, released two Marathi movies, Yere Yere Paisa and Gulab Jam. Both the movies were well received at the box office. During fiscal 2018, a total of 10 movies were released across 3 languages, Hindi, Marathi and Punjabi. Zee Music Company, our music label, continues with its library expansion of both Bollywood as well as regional music. Further improving its performance during the quarter, the music label registered approximately 3.4 billion views on YouTube and is the second most subscribed music channel on YouTube. With this, I would like to address any questions that you may have.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Sir, congrats on the performance. My first question is on the Tamil market. You have done well with highest time spent, etc. My question is, in a regional market, Tamil is one of the few wherein there is a strong dominant player and all the 3 national players are there. So my question is the market big enough for 4 large players? And what happens on the cost side? Will all the 4 players be viable from the longer term perspective?
So, Avnish, the rule of any business and applies to us as well. It's the top 3 players are the people who make money in the business, and the 4th generally loses money. Same rationale should apply even in the Tamil market for anybody.
And what has led to the highest time spent? Your market share has also improved. Could you talk about that in Tamil?
Again, it's driven through higher engagement, through ground connect, as well as content that we have been able to put together. And that's what is gaining the traction.
My second question is on ZEE5. It's been a short time, only 3 months of launch. Do you think original fiction content and movie library is enough, or you think sports or kids, which your competitors are doing, that will be required at some stage, which is currently difficult because rights have been sold? And second is, could you give us some numbers on how we evaluate this business? Because you have tried it earlier also. So in terms of subscriber or in terms of time spent, if any data you can share, how things are?
So, Amish, definitely having sports in is an easy way to grab eyeballs for even a digital platform. Having said that, we have exited the sports business and currently do not have any intentions of re-entering that. We do believe that original content as well as movies is good enough traction for attracting consumers to our platform. The other thing which is also very attractive is the quantum of content created in their local languages, which is a very attractive factor. As we know, as we've seen on television, that we consumers consume content in their preferred language of viewing. The same should apply to even the new platforms, which is the digital platforms. What was the other part? I think what the metrics you should use for evaluating any digital platforms is monthly active users and time spent that they spend on every session that they do. Having said that, 2 months is too short a period for me to start sharing numbers. I can only share with you that I'm quite pleased with the performance in the first 2 months itself. And at the end of Q2, I will give you definite numbers of where ZEE5 stands in the market compared to anybody else.
A small follow-up here. You have plans for some 60-70 new shows in FY19 on ZEE5. So will you be able to back up by so much ad spend? Because I think that is critical for this kind of a new media. If you don't back up, what is the plan? What is the investment plan in terms of advertising for these 60-70 new shows?
No, all the original content that will be created sits behind the paywall, and it's not available for advertising at all.
No, I'm asking in terms of popularizing those shows, you would need to invest in terms of media ad spend. That is my question.
Oh, absolutely. We will have to invest to make people aware of the kind of content we are putting out there. How else will they come and discover it? So we will be taking adequate marketing spends for the shows. Obviously, you don't go and spend and promote every show that you do. You spend disproportionately on your tent poles, and that's where then people start discovering all the other content around.
Okay. Okay, Puneet, that's all from my side. Thank you.
Thank you, Avnish.
Thank you very much. The next question is from the line of Kapil Singh from Nomura Securities. Please go ahead. Mr. Kapil Singh, your line has been unmuted. Please go ahead with your question.
Yeah, hi, sir. Congrats on a good set of numbers. I wanted to check, has there been any non-recurring or one-time kind of cost incurred during Q4 for Z5? Or should we expect this kind of expenditure to continue for next few quarters?
So we have, there is a launch expenses that have gone into Q4 for Z5. We will continue to spend in advertising going forward as well. And also the introduction of more original content that will come in will take the costs up. Having said all that, we are pretty confident of still delivering the 30% plus margin that we had guided for.
Okay. Any number you would like to share? Like what was the launch cost?
Sorry, Kapil, we don't share those numbers.
Okay. And what kind of content cost inflation should we expect for next year? And because we have also seen, significant investment in inventories. It's up almost 950 crores or so. So any color on that as well, please?
So what inventories you are referring to is predominantly driven by our movie strategy of buying satellite rights as well as investing behind production of films. And that will continue going forward as well because that strategy has paid off for us. The original content, if you are referring in context of Z5, will not move the needle much because if you look at, we produce close to 500 hours of content per week for television. I don't think we'll go anywhere near that number, even on an annual basis for Z5.
Okay. So what kind of content cost inflation should we look at?
So content cost, as I have said in the past as well, on per hour basis will be inflationary. It's only when we add number of hours will it move the needle. We have not changed our plans on the original number of hours significantly on any of our network, but we will be adding few markets, one particularly in this financial year itself, but again should be in control.
Okay, sir. Okay, thanks.
Thank you very much. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity for two questions. First is, can you share your thoughts on digital video advertisement, like revenue shares, who is doing well? It looks like the market is dominated by YouTube, with broadcasters, Facebook, telcos, all of them looking to get a share of pie. So would it be possible for you to give some numbers, how, what your thoughts are, and what your aspirations are in terms of digital video advertisement?
So I think if you look at the growth that you are seeing in digital advertising, a significant part of that is being driven through video consumption. As you rightly said, yes, YouTube is leading in that in terms of volumes, but definitely my view is that in terms of value, it will be the professionally made content which will have an edge going forward. Does that adequately answer your question?
Partly. Actually, what I was looking at is Google's revenue was almost 7,300 crore last year, which is very, very large. So it looked like they are not only capturing the volumes, but also value. They seem to be doing very well. So
you need to strip the search revenue from that before we can even talk about it.
Sure.
So a large part of that comes from search and not from video.
Okay,
yeah.
Sure. So, okay, understood. Fine. Second question, sir, on the revenue from the telecom operators. They now have over 300 million customers, and they've decided to keep the services free for next one more year. So, how are the collections, and is the revenue keeping pace with the customer additions which they are doing? At some point in time, would you decide to charge a lot more compared to what you're charging right now?
So definitely, we will be re-entering the negotiation phase as and when the contracts come up for renewal, and we will be asking for fair value of our content. even if the telcos want to give it free to their customers, we would still need to get fair share of our value, because we are investing in that content significantly.
Will that number start becoming meaningful for you? Is it already a meaningful number for you? And any number which you can give out, because already 300 million customers are getting access to the content, while they might not be watching all of them, but.
Hello. Sir, we don't give details by party on our subscription deals. That will not be fair. But let me assure you that the growth trajectory on those numbers will be higher than the regular cable and DTH companies.
Understood. That's it from my side. Thank you, sir.
Thank you, Pranav.
Thank you. The next question is from the line of Parag Gupta from Morgan Stanley. Please go ahead.
Hi, good evening. So, two questions. Firstly, on your digital strategy, Puneet, what I'm just trying to understand is you're talking about maintaining 30% margins going forward as well, which obviously means that you're not going to be, really spending a lot of money on advertising relative to what some of the other players are trying to do. So what I'm just trying to get at is, with your digital strategy, what do you think you're trying to, play for? Are you there because you think consumer behavior will change? And they're looking for different content? Or are you doing this because you believe that at some point in time advertising will shift digital and hence you would want to capture the entire pie? So which is a key priority for which ZEE5 is critical? So that's question number one. And related to that is, based on ZEE5 for fiscal 19 and the way the market is at this point in time, what do you think could be the outlook for advertising and subscription growth for fiscal 19 on the back of both your broadcasting business as well as the digital business?
So, Parag, I think first statement of yours is not correct in my view, that we are not investing behind the digital business in terms of advertising for it. If I was to stop all my investments today, I can deliver margins of upwards of 35%. And I'm guiding for a 30% plus margin. So all of my new businesses are taking almost 500 basis points plus of my profit into it. And you are better calculation and can do the calculation better than I can. So definitely we are going to invest behind ZEE5 and make it a real formidable player in the digital space. The reason we are doing that is we are, at the end of the day, a content company. And if the consumer's preference to consume content is not the television, but an alternate screen, we are going to make sure that we are available on the end of that screen as well. We are looking to capture the mind share of entertainment of consumers, not just at the end of television screen, but the end of any screen that they choose to do it. That is also the reason our investments into the film production business, into the digital business, and also now going forward into the live entertainment business. That's my answer to your first question. If you can just don't mind repeating the second question again.
I was looking for, what could we be thinking about advertising and subscription growth for F19, given that you will also have some incremental revenues coming in from ZEE5?
So the industry for the television side is expecting a 12% or 11 to 12% kind of number. Our endeavor will always be to beat the industry number, and obviously the margin of beating the industry number will depend on how our viewership share changes going forward. On the subscription side, we are pretty confident of a low teens kind of delivery, given that the tariff order matter is still sub judice and we don't have any visibility as to how and when that will come out.
Got it. Thank you.
Thank you, Parag.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Hi. Thanks for the opportunity. So continuing with the domestic subscription bit, now FY18 did see a relatively slower growth, essentially because of, some confusion regarding the implementation of TRS policy. And given, the legal angle is still there, probably it may get implemented, if at all, by the end of this calendar year or next financial year. What happens till then? We are still continuing with the older deals, or there is some inflationary hike which we take across the deals?
So every deal takes an inflationary hike, definitely for us. The reason for last year numbers being a bit lower than our expectation also had to do with the fact that one reasonable sized player has gone away from the market in the DTH segment. That has also led to a certain amount of slowdown for us. Having said that, given the current situation, we are largely in the fixed fee arena itself, and a low teen kind of growth is what we are targeting.
Sure. So, Puneet, for phase 3 subscribers as well, as and when they got sort of, digitized, that number still remains a lump sum deal with an inflationary hike, or there is probably a higher hike there?
It's a combination deal that we do. A large part of the hikes are coming in are on account of phase 3. Because as you know, the ARPUs in phase 1, phase 2 have not moved significantly, and therefore to expect too much hike on that will be unfair on the DPO partners.
Sure, that's helpful. Secondly, Puneet, on the content bit, now you did mention that inflationary hike on a like-to-like basis plus some bit of volume growth wherein we are focusing to increase the original content. Just trying to understand the same from a OTT content perspective. How are we accounting for the OTT content? Will it be fully accounted for in P&L, or how is the structure there, if any clarity has emerged?
It's pretty much in line with the television policy.
Okay, so it will be the content once shown will be fully amortized, in the P&L in the first year itself.
No, our television policy is 80-10-10, so it will be in line with that.
Okay, and movies will be similar as for our digital bit, for our TV bit.
Yeah, we are not expecting any change in that right now.
Okay, and any timelines we can look forward to for the international launch of ZEE5 as well, or it's still some time away?
No, it's maybe in the next quarter or two itself. Territory by territory we are going. It's not a composite launch globally, so it will be done territory by territory.
Okay, that's helpful. Thanks a lot, and all the best.
Thank you.
Thank you. The next question is from the line of Vikas Mantri from ICICI Securities. Please go ahead.
Good evening and congrats for good set of numbers. Two set of questions. On the subscription side, Puneet, you said you are a tad disappointed with the results, and clearly that is because of the DTH problem also. My question is, you have no more have the sports portfolio, so does that reduce your bargaining power with the distributors, and that is why you got into many more tiffs in last quarter than regular? Also, we are seeing consolidation in the DTH space among two players. So, does the outlook change from a DTH space in terms of our pay TV revenues also for FY19?
Vikas, firstly, thank you, but my view that because the sports business has gone away, that has not taken away any leverage in terms of our negotiation power. And as you can see from the tips that you mentioned, that we have emerged victorious there as well. Therefore, our entertainment content without sports is also in demand, and therefore we are able to take increases as and when they come along. Having said that, of course, consolidation does help the other parties also. But as long as my content is relevant, I am pretty confident on getting the right value for my content.
Okay. On the inventory side, we did talk about that investments in movies will increase last quarter as well, but I was surprised with the quantum of increase of 700 crores in this quarter. Now, the way I see it is generally it's a 5-year amortization on the movies front. So from last year where you had, 2 years back where you had 1300 crores sitting in inventory, and the annual amortization of that would be maybe close to 300 crores. Now you will be amortizing close to 500 plus crores, 560 crores. So shouldn't that affect your margins on the programming side clearly? Also, can you explain me how does this 1,000 crore increase happen in a year? What has been the driving factor? And also outlook over, I was assuming this levels to be after 3 years they have hit now. Is there a possible trajectory downwards from here of inventory?
Yeah. So starting with amortization thing. So firstly, entire amount of inventory does not is not movie. There are other parts of inventory also, which are in regular course. So, I mean, of course, that said, we will definitely see sharp increase in amortization of movie expense. But you are just looking at the cost side. You need to look at the revenue side also. So one is we are, exploiting this movie over many more number of channels. So that's number one. Number two, we are actually increasing our movie buying in regional markets also. So that's where the additional monetization is happening, and there is, in due course of time, you will actually see we might be entering into movie business, or we might be launching movie channel in other markets also. So if you take into account that revenue also, this amortization expense is very well planned, and when we talk about a 30% margin, and when we talk about our content cost will remain in the similar band, we have actually taken into account this increase in amortization.
Just to add to that, Vikas, also what has led to this kind of significant increase is the fact that we have bought a lot of future rights where advances have been paid to block those libraries, which will further strengthen and therefore reduce the need to buy a lot more in those years. So it's a lot of advanced buying that we are doing, which is also sitting in there, not necessarily all of it will hit amortization in the coming year itself.
From absolute basis, it will still continue to increase. Is it as a trend line, or should we see now that we have spent high, maybe slow down over the next 2 years?
So within, if you look at our content cost, there are 3 or 4 buckets. So one is that original content. Now, original content of 500 hours which we produce, that itself is a very large chunk. Then there is movie amortization, then there is syndication of content. So if you look at movie amortization, yes, that cost will actually grow disproportionately. But still, in overall scheme of things, the increase in cost would be, quite manageable.
I'm asking the balance sheet inventory number.
So balance sheet inventory number, you'll still see some increase in inventory because there are some deals which are there in progress. But I think in next 1 year, FY19, we would have been done with most of our purchase and most of the repository we need to launch regional movie channels. Also for digital offering, the kind of plans we have, we would have probably acquired almost what we need. So I think beyond that, you should actually start seeing inventory not going up. That's number one. And as Puneet mentioned, that some of the rights will come into the future. So again, our need to buy more movies into future will also go down significantly.
Yes. Thank you. That's what I was expecting. Thank you so much and best of luck.
Thank you very much.
Thank you. The next question is from the line of Sanjay Chawla from GM Financial. Please go ahead.
Hello. Thank you for the opportunity. Got 2 questions. First question is on what is the movie slate in terms of production and release for FY19 across various languages. That is one. And second question is, what are your thoughts on the telco tie-ups in terms of pushing ZEE5, something which some of the other OTT players have been doing quite aggressively over the last few weeks and months?
So our slate for next year in film production is 10 films have been locked in already, which will be releasing in financial year 19. We may be adding 1 or 2 films more to that. These are predominantly in the Hindi and Marathi language segment. On the telco tie-ups front, yes, we are in active dialogue with all telcos to look at partnering with them on ZEE5, just as they have with other OTT players. And as and when we have certain things to disclose, we'll come back to you.
So, Puneet, just to follow up on this OTT, issue, does the company have to demonstrate a certain level of, activity, volume of consumption on the digital side for it to be able to command a certain price from the telcos and to actually enter negotiations?
Absolutely. They will not. They will only take content players that move the consumption of their data significantly, and therefore that's the way to get the value for your content from them.
So over what time frame do we see these telco deals kind of panning out?
These are complex technical integrations apart from commercial negotiations. So I wouldn't like to give you a timeline to put myself under pressure.
Okay. Thank you and all the best.
Thank you very much. The next question is from the line of Alankar Garude from Macquarie. Please go ahead.
Hi, Puneet. Thanks for the opportunity. My first question is in terms of viewership on ZEE5. So if you can help us understand how currently the viewership is divided between content which is already available on television versus the originals.
So as of now, we have put very small quantum of original content on ZEE5. Alankar, we have not yet opened up the floodgates. On the consumption today, it is largely driven by our television content as well as the movie library, which is existing there. Our first tentpole property on digital will launch in the month of June, and that's when you start seeing traction in terms of viewership from there.
Understood, sir. Sir, secondly, more from an industry perspective. So if I just look at the gap between registered users and paid users for most OTT apps in India, it remains quite wide. So in your opinion, what can ZEE5 or for that matter any other platforms do to bridge this gap, apart from originals, of course?
See, all of us are in trial and error mode as we speak. So does anybody have an answer as to what will work and what will not work? It's very difficult to say. Obviously, we know for a fact that sports is an easy hook to get consumers to pay for content. Having said that, original, in my opinion, will be a key driver for paid consumption in this country. But it's still to see what genres of content will play out.
Got it, sir. Thanks and all the best.
Thank you.
Thank you. Before we take the next question, we would like to remind our participants that you may press star and 1 to ask a question. The next question is from the line of Yogesh Kirve from Batliwala and Karani Securities. Please go ahead.
Yeah, thanks for the opportunity. So in terms of the original programming hours, in the television business, in the existing channels, so could you give us some sense, so what could be the increase from the existing channel? I understand you would like to add new markets, so that would be on top of that.
So it varies from channel to channel as we speak. Currently, we are already at our on the Hindi GEC Zee TV at 32.5 hours of original content. And as I said, we will cap it at 35 for the time being. Similarly, it varies over other channels between 20 hours to even as much as 60 hours on some of the videos.
So are there any pockets there where we could see a more material increase in FY19 compared to FY18?
So in my view, I don't think you will see too much growth in original hours in financial year 19. It will predominantly remain at the levels it is, maybe 5 to 10%, depending on the need on during the year market to market.
Sure, so that's was helpful. And secondly, in terms of the international, especially the ad revenues have done well after a while. So are the challenges which will exist in the market are largely behind, and should we expect a steady growth from FY19 onwards?
We would like to expect that. We are investing in creating local content for those markets. Our non-Indian language channels also have started seeing traction in some key markets, which has led to this kind of growth. And we do expect that the advertising growth should continue. On subscription side, though, it will remain flat in dollar terms.
Sure, sir. That's all from me. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Amit Kumar from Investec Capital. Please go ahead.
Yeah, thank you so much for the opportunity, sir. My first question is actually just a follow-up from the previous one. So as I understand, ZEE5, I mean, it's both an AVOD platform and an SVOD, platform. On the SVOD side of the business, I mean, how are you sort of expecting the market to shape up? I mean, is the B2C, side of the business, which is sort of direct, access to consumer, you expect that to be a bigger pie over a period of time, or is it going to be more the telco side of the business, which is, I mean, sort of B2B2C, side of the business, you believe, is going to be bigger, I'm saying in the medium term, in the next 4 to 5 years. What are your thoughts around that, essentially?
So obviously, the telcos will be an easier route and a faster route to capture the consumers because they already have a relationship built there. If we try to go pure B2C route, that will be a very long drawn and a very expensive route to take. And therefore, we would like to partner with telcos, just like we partner with DPOs on the traditional distribution side.
Okay. But, then, I mean, from a focus perspective, would your focus be on, that side of the business, or, I mean, you still want to, grow the B2C, side of the business as well? Or you're okay? I mean, even if, eventually 100% of, your export model basically comes from there, you're fine. I mean, that's okay.
No, it doesn't work that way. Our B2C relationship is based on the content that we create. And the B2B, B2C, or B2B and B2C model only works if my content is relevant, right? A telco will agree to partner with me only if there is demand for my content. So the relationship on both angles have to be equally maintained from our perspective. Okay,
understood. So then quickly on the subscription revenue side, this Tamil market, which is, all the other markets, at least phase 1, 2, 3 have been sort of completed. Phase 4 is, pending a bit. I would want a little bit of your comment on phase 4 also on, how much time from here do you believe it sort of takes to, fully comment. But, more importantly in the Tamil market, till around 6 months back, our market share was in the 7 to 8%, region. It has, sort of shot through, quite significantly, almost doubled to around, 14-15% now, and fairly significant. So, do you, believe that, some sort of a subscription revenue upside, is there for us also in the market as Arazu digitizes and the market digitizes? Of course, in the rural, areas, but, especially in the, urban, Tamil, side. And, any sort of, either numbers or thoughts that you have around it?
So I think firstly, phase 4, as I've said in the past, I will repeat it again, that pretty much digitization in phase 4 is done. Anybody who had the potential to pay for television is already into the fold through the DTH companies. People who did not have moved to either free dish or other alternates that they may have chosen. On the Tamil Nadu side, it's unfortunate, while our shares have grown significantly, that's the only state where digitization is at its lowest currently. It's still 60% analog market, at what I last estimate I had got. And therefore, the opportunity definitely will come in the future, but not there today.
What is your sense of, what Arazu is doing in that market? The digital subscriber base hasn't sort of significantly moved up in the last 6 months?
Difficult for me to comment what Arazu is doing in the market, but definitely they are not, it's still 60% analog, so something must be wrong with it.
All right. Just a small follow-up on that phase 4 question. The reason why I specifically asked this is that I think you have filed a complaint, against one of the larger, cable operators, saying that there is some bit of analog piracy, which they are still doing. That's the reason why I actually asked that question.
Can you take it offline?
Yeah, sure. I can do that. Not a problem. Thank you so much.
Thank you. Next question is from the line of Rajiv Shah from HSBC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just, couple of questions I have. Firstly, when you go and partner with Telco Puneet, in that case, don't you give away your platform power to telcos? Then how do you really build this as the alternate destination for investment in, multiple screen era? And second is, telcos are also getting into content, like particularly Reliance Industries with, 1,000 crore with Eros, and they're trying to stitch all the properties they have on the content side. So how do you see, Amazon Prime and Reliance, which are emerging as big players? Do you think you provisioned enough, with your guidance of 30-31% EBITDA margins, for the potential contest which we may see, in this whole space, because they are trying to sponsor some other business maybe in the next 2-3 years, and for you, this is core. So just trying to understand your thoughts on both the issues. Thank you.
So firstly, let's talk about the power shifting that you talked about. At the end of the day, as I have said, Zee is a content company, and if the consumer is available at the end of any pipe, and if that consumer is available at the end of telco pipe, I have to go and access that. And if that means I have to partner with telcos, so be it. I mean, today, when I partner with a DTH company or a cable company, I don't give away the power of my content. The content belongs to me. Moving to your second question, I think the fact of the matter is, content is a business where the relationship is directly with the consumer. And I do not believe that any one party can control the entire consumer's consumption of content in any kind of environment. So, having said that, as long as we make relevant content which resonates with our consumers, we will be relevant in the market, and therefore it doesn't really matter.
So just to follow up, so you think there may not be any need to, invest more than what you've planned currently from a 12 to 18 months perspective?
Well, I can't forecast, but from where I stand today, I think we have made a formidable plan, which, if executed to where we want to make it achieve, we would have achieved our objective.
And, as you said that your entire 60-70 originals will not even stack up to 500 hours, but just trying to understand your strategy, then when, Reliance will take a year, or Airtel will follow Reliance, which could be 2 years away, why not use this fiscal 19 to really, the original is one space where there is no player today in terms of doing volumes. So why not take this opportunity to go a little more aggressive and become the destination? Because Hotstar is more about cricket, and when it comes to original, there is hardly anything there today.
Let me flip it to you. Do you know any other OTT player who's launching 70 shows in 1 year?
Yeah, but I said, it's not adding to 500 hours. So,
What is the optimum quantity? I don't know. Is it 500 hours? Is it 1,000 hours? Is it 5,000 hours? It's a question of, we are discovering the market. And just by throwing money at it is not the right strategy in our view, and that's not the way we operate. So we will go into the market at our own pace and grow the business as and when the traction happens.
Yeah. And one last question, any plans to add any new market or new channels in any market this fiscal?
We will be adding the Kerala market this fiscal, and we are looking at other genres within the existing regional market.
Okay, that's helpful. Thank you so much.
Thank you.
Thank you very much. Next question is from the line of Rohit Dokania from IDFC Securities. Please go ahead.
Yeah, hi, good evening. Thank you for the opportunity. Just two quick questions. Can you talk about your tax rate expected for FY19 and 20? And also, can you talk about any update on free dish? And let's say if, increasingly free dish was to continue to become weak, can that open an incremental opportunity for us in terms of subscription revenue?
Yeah, so Rohit, on tax rate, we should go back to normalized rate of around close to 35% in FY19 and 20.
Okay.
On the free dish side, definitely if the free dish becomes weaker, there will be huge opportunity not just on subscription side, but even on advertising side. Because if you look at all the advertising growth that has happened on the FTA side, will eventually come back to the paid channels, which is not the case today.
Sure. So are you seeing that happen, Puneet? Is free dish incrementally becoming weaker and weaker?
Not from where I'm sitting today, because the policy is still not out. We do not know what shape the policy will take. And even if a policy comes out which is very, very detrimental to the broadcasting industry, I think the long tail will fall out first before the main players start getting impacted.
Sure, understood. This is very helpful. Thank you.
Thank you.
Thank you very much. The next question is from the line of Manish Adakia from Goldman Sachs. Please go ahead.
Yes, hi, good afternoon, and thank you for taking my questions. I have two. The first one is just on the subscription revenue. Now, it seems like ARPU growth for some of the pay TV operators has been somewhat challenged in the recent quarters. How do you see the ARPU of pay TV operators essentially growing over the next 3 to 5 years from a consumer point of view? And as such, how do you see your own revenues on the subscription side pan out over the next 3 to 5 year period? And you mentioned in the previous question about the potential of subscription if, let's say, a free dish were to get more weakened. But you also earlier mentioned a comment that a consumer who has the ability to pay is already on a pay platform. So do you really think that from a free dish standpoint, I mean, consumers who are today on that platform could move to, let's say, a pay subscription platform and as such help in increasing the subscription revenues for the industry? That's just the first one. And second, on Zee5, a follow-up question. Given the scale of these telecom operators, and you said that you will look to tie up with them in the near future, do you think that for you, in a 3-year horizon, is it safe to say that a larger chunk of your Zee5 dollars will come from subscription revenues and not ad dollars, just because the scale of these telcos are so large today versus, some of the other operators? Thank you.
So I'll take the second one first. So I think it's still something that we are going to discover. India as a market, will have both AVOD as well as SVOD as the consumption patterns. If you look at our strategy, purely on the AVOD side is driven largely from a catch-up TV perspective, whereas the premium services, which includes original content, etc., all sit behind the paywall. So we do expect a healthy mix of advertising and subscription to coexist. And yes, a large part of that may come through the telcos because it's an easier access to the consumer from our perspective. We look at telcos like another DPO in our ecosystem of business, and that's how we're looking at the business. The first question on the free dish part, I think what I said earlier about anybody who has capability of paying has already taken a pay subscription. One has to also keep in mind that we have data to prove that a large chunk of the free dish subscriber keep shifting between free and pay for services purely because they have both the connections. It's a function of whether they want to pay for the content in that month based on certain content that may be available, whether it's sports, whether it's movies, whether it's a show that really resonates with them. So the two are not in isolation of each other. I think they are linked in certain manner. Having said that, when 30 million consumers are used to entertainment content of the kind of quality that we provide, and if free dish was to shut down, a large part of that would definitely migrate to a paid service. Whether they will move to an ARPU level that currently exists in the market may not be, but I'm sure the DPOs will come out with skinny packs as we have seen in the international markets and including Indian market going forward.
Right. That's helpful, Puneet. And just one of the questions that I also had was on the outlook for the pay TV ARPU X of free dish. So, for example, all the broadcasters, including yourself, are trying to tie up with these telco providers, would offer a lot of content through mobile phones over time. So do you think that, the subscription growth on the pay TV side or the ARPU growth there could stay challenged for the next few years, and as such, on your core subscription revenue side, that could come pressure once, the whole digitization benefit is behind us?
I don't think the two are linked. I think they're independent of each other, because we are talking about two distinctly different services. On the traditional form of distribution of our linear content, we cater to household, and therefore that's a different way of us charging for our content, whereas on the alternate device, it's largely individual-driven consumption. So that cannot be compared one versus the other. I think the DPOs in the traditional form are going through their own level of issues as to why they are not able to drive ARPUs up because of undercutting themselves, is the reason that we are not seeing the ARPUs move up. If you look at on the telco side, while they claim to give content away for free, but they do charge for bandwidth. And if you look at most of the bandwidth consumption does come on the back of video consumption.
That's helpful. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Kritika Rastogi from ACK Capital. Please go ahead.
Thanks for the opportunity and congratulations for a good set of numbers. And Dr. Subhash Chandra's show is really very motivating. So, I would like to ask some question like, on an industry level, I would like to
interrupt, Mr. Rastogi. I just wanted to check, have you kept your phone on speaker, if I may ask? Because your voice is too loud, actually.
Go ahead, ma'am. Go ahead.
Hello?
Yes, go ahead.
Yeah. So on an industry level, I would like to know the ad revenue trend as to how much is coming from TV, digital or print.
So, around between 45 to 50% is from television, then we would have print around 35% and around 15% is digital, and rest is radio, out of home and other services.
Okay. Thank you.
Thank you.
Thank you very much. As there are no further questions, I now hand the conference over to the management for closing comments. Over to you.
Thank you very much. Thanks everyone for your interest in Zee Entertainment. If you have any follow-up question, you can reach out to Investor Relations team. Thank you very much.